Hey everyone, Geoff Hyland here with the Hyland Group at eXp Realty in Prescott. Hey, I want to give you your December 2023 market up, which of course means that we're looking back at our stats from November. Before we dive into that though, I just want to say happy holidays, Merry Christmas, and thank you to all of our valued customers over the years. We want to express our gratitude to you for your continued support and wish you the safest and merriest of seasons coming up. With all that being said, let's dive into some of the numbers. So we did see some changes last month that I want to kind of address. So last month, November, of course, we ended up with 148 total closed escrows. So if you refer back to the charts and kind of look through that, you're going to see that that's about a 33% decrease year over year from November of 2022. Now, what attributed to that? Probably no secret. That was that rise in interest rates where we saw the interest rates crest over 8%. Interestingly enough, the number of pending homes in November compared to November of 2022 stayed exactly the same. So it was kind of a lagging indicator, if you will, all that accumulation of rising interest rates. Now that we're in December, great news to report is that the average interest rate now is about 7.09 to 7.1%. So the interest rates have come down nearly a point over the last 3 to 4 weeks, and it actually marks the lowest level of interest rates that we've seen since late July and early August. As a result of that, across the country, refinance applications are up about 14%. So if you're one of those buyers that did buy at a higher rate and you want to look at refinancing, something to possibly consider. What happened with values? Well, realistically, the values stayed pretty much the same, almost negligible, if you will. In Prescott last month, we saw a slight decrease of 0.6%. Prescott Valley, 0.7%. MLS overall, a slight uptick of 0.3%. So essentially, just kind of staying steady. And again, I think what's helping that a little bit is that those interest rates did come down. And here in the last couple of weeks, late November, early December, we're starting to see a much more increased buyer activity in the marketplace. So if you're on the market right now and you've been on the market and you're waiting for that break, we've seen some activity kind of loosen up due to those interest rates just in the last couple of weeks. Days on market, again, I would attribute this back to the interest rate in fluctuations. We did see an increase in days on market. So Prescott right now, and remember, these are homes that are actually selling. Prescott right now is taking about 69 days on average for homes to sell. In a lot of cases, they might have gone through, started a little optimistically, have come down a little bit, and then they sell. MLS over wide, 63 days, so right at that 2-month mark. Prescott Valley, 39 days, so a little bit less there, and Chino Valley, 69 days. As far as inventory is concerned, we've talked about this in the past, and a lot of times what we see is the inventory will peak in either August or September. We didn't really see that last year. Remember, there was a lot of sellers kind of hanging on with the volatility and uncertainty until we saw the inventory finally drop January 1st. Right now, we're kind of seeing the same trend. So we've been hovering right in that 800 to 825, 830 range in terms of total site-built single-family homes on the market. And we rolled into December 1st with 802 homes on the market. Active inventory, we're seeing 112 days on the market right now. So remember, if you're kind of first time tuning in, what's the difference? I don't understand. 69 days for Prescott on the market, MLS 63, and now I'm talking about 112. Remember, what I'm talking about are the homes that are selling the days on market in average to get them sold. Now I'm referring to those 802 homes that are on the market. They're averaging about 112 days on the market. And interestingly enough, based on the current values MLS wide, those 802 listings are currently marked at 13% higher than what the average homes are selling for. So that's probably going to attribute to some of those extended marketing times. Because we had 148 homes sell, which was a 33% decrease from a year over year and a decrease from the last few months where we've been selling 230, 220, 250 homes per month. What we're looking at is our absorption. Okay, so we've been talking about how much of a month's supply we have on the market, and we've really been going back and forth between 3.5 months of inventory. Now with the decrease in closings, if you do the math on that, we're now approaching a 6-month inventory. Now, remember, balanced market is about a 6-month supply, 5 to 7 months. But it is the first time that we've seen that uptick in a number of years, actually. Other news of note, recently, Fannie Mae just made an announcement that if you're buying a multifamily owner-occupied property, so what am I talking about there? I'm talking about a duplex, triplex, a fourplex. If you're gonna occupy that property, historically you had to have 15 to 25% down in order to purchase. They've reduced that now to 5%. So a lot of buyers out there creating opportunities for you. If you're open to a duplex or a triplex, you get a couple tenants in there, offset some of those payments, and you can come in with as little as 5% down. So if you have any questions about that, reach out to us. And that's basically the update for right now. So again, Merry Christmas, Happy Holidays, and thank you again. Talk to you soon. Bye-bye.